I'm hearing a few rumors that the ECB might lend money to the IMF to help the Eurozone get out of the debt crisis, which sounds quite interesting because maybe the ECB could just, pump that money that would be lending to the IMF into its own funds.
Look, Eleni, first of all, I'm not sure. I haven't really picked up on that. As you say, it's just come out. But as far as the Eurozone crisis goes, it's very difficult to envisage a comprehensive solution in the long run without the short-term intervention of the ECB, specifically with unsterilized bond purchases. Your previous guest mentioned that the ECB had been in the market, but if you look at their securities market program, the first thing is that it's too small to actually make that much of a difference. I mean, if you look at last week's purchases were around 10.8 billion euros. The week before that was around 4.5 billion.
It's just a sentiment game here because they're just dipping their toes in a sense, and then everyone's, the ECB stepping into the market, and this is creating a bit of excitement.
Absolutely. The Bundesbank influence within the ECB won't allow them to drastically expand money supply to support the peripheral economies, and I think that's the key issue that's holding back a recovery from the spikes in the bond yields that we're seeing. I mean, yesterday, you saw a massive spike in the Spanish yield on the back of that pretty disastrous auction.
Yeah.
And the bottom line is there's no way that even with these technocratic governments and even with full commitment to the austerity measures that they've already promised, that in the short run the market will be cancelled. The market will be calmed.
Who's going to step up and buy European bonds going forward? We've heard, a lot of talk about, China should be assisting, the West should be assisting a little bit more, the US. At the end of the day, it sounds as if, we're talking about a coordinated action to ensure that peripheral Eurozone, and now of course Italy included, needs to be saved.
Look, it's pretty clear to us that it'll be a very huge task for a global intervention. First of all, to create that global a consensus is a massive task. The second thing is that with slowing global growth, the US in a massive debt problem of its own, for them to commit further funds to the IMF to support the Eurozone will be something that's, I think, a little bit optimistic. The developing countries and China in particular is possible, but at the end of the day, those will only come with, in exchange for massive political and economic concessions on the other side. So, maybe you see that Europe has to give up their common agricultural policy, or China gets a greater say in the running of the IMF. Maybe the next head of the IMF is a Chinese citizen.
It sounds like a power play.
Yeah, look, all that's happening now, Europe's going to be a very boring place going forward because the Germans are taking over everywhere. So what's happening now is they're looking at what the new governments are doing, they're looking at what's going to happen in Spain, they're sorting their own house out, but the ECB will come with the money to stabilize the market. They will. And is it €1 trillion? I don't know what the number is.
Well, the EFSF is now €1 trillion.
Yeah.
So perhaps
but they'll come and they'll save. I wouldn't say save the day because, as I said before, this debt will be with us for decades. But they'll stop the panic, they'll stop the rout.
So yes.
Remember that, just one more thing. Remember that the EFSF is populated with money that's backed by guarantees by the actual European governments. So that's actual real money, whereas if the ECB were to intervene, it would be on the basis of creating. So it's expanding the nominal money supply.
Let's say printing.
That's what you mean. That's what you mean. But really, with inflation actually not a massive threat in the longer term, and the actual composition and stability of the euro area at risk, I don't think that that's something that eventually they'll pull back from.
Let's touch on inflation. Set to be released in South Africa next week. We're expecting a number of 5.9%. That's consensus, 0.1 away from reaching that target.
Yeah, we're a little bit ahead of that. We expect it to be at 6%. And again, that kind of gives you an indication that although inflation is moderating in other countries, and you see probably the end of the tightening cycle in much of the developing world, in South Africa we've lagged quite significantly because of our strong agricultural harvests, specifically in the last season. This season our agricultural harvests have been weaker and we've had some exports. So from that perspective, I think you can see food inflation ticking up a little bit more going into 2012. And although the Reserve Bank expects only a temporary and rather minor breach of the target, with a weakening rand, we expect that to be a little bit more sustained.
And when we had a fantastic retail sales number, so I guess it is backward looking, so
Yeah.
the month of September, 8.3% year on year.
Real,
I'm surprised.
real, not nominal, eh? Real.
I'm
It's a big number.
surprised that the retailers didn't perform better this week.
Well, look, the retailers are already expensive. So, I mean, understand a lot of good news already in the prices. But if you look at that number, you swear there wasn't any economic problems anywhere in sight. I mean, that is a seriously strong number. Now, it's all coming from the so-called, and not all of it, but okay, it's coming from jobs created by the government, increases way above the inflation rate by the government, and unsecured credit. That's where this retail sales number is actually coming from. Government subsidies is a relatively small part of that. Now, this cannot continue forever, so we're probably at the peak of year-on-year retail sales growth. So the data coming out from now onwards will probably still be good, but not as good as this. So, be maybe a little bit cautious about the expensive retail shares.
Sorry,
just 10 seconds. Yes.
Just remember that last year we had a hangover in the post-World Cup period, so that really gave kind of some impetus to this year's number, and that kind of should work its way out through towards the end of the year.